What's up, everyone? Welcome to the Suttie Mortgage Show. We are here today with the biggest news kicking around, and that is that CMHC, the mortgage insurance company, has changed some of the rules. Now, this sent ripples through the industry, scared the crap out of every mortgage broker and realtor in the country, because the initial thought was that it was going to make everything a lot harder to qualify for. And the reality is, when it comes to CMHC, that's the truth. It's going to make, we figure that the new rules will reduce your purchasing power by about 11%. But the good news is that there's not just one insurer in Canada, there's actually three, and the other two aren't playing that game. So I think it's important to note that as of today, the other insurers aren't playing the game. So we really feel when CMHC changes their rules on July 1st, it's going to still be business as usual and we're going to be okay. So let's dive into that rule though and talk about it, because I think it's important just to give people an idea of what that was going to be like. So the first rule, the biggest one of all, was that CMHC is going to require the ratio, the amount of income, the amount of your mortgage payment that takes up your income to be less. So it currently is 39%. So your mortgage payment, your property taxes, they cannot exceed more than 39% of your income. Well, CMHC is changing that to 35%. So that means that dollar of mortgage payment has to occupy less of your income. So that's going to have a huge impact with CMHC insured mortgages. Again, it's important to note the other lenders aren't changing, so we're still good. The next change that we're seeing happen is that CMHC, I was going to mix those insurers up, CMHC is requiring one of the applicants on a mortgage to have a 680 beacon score. So on your credit bureau, a 680 credit score or higher, and that's one of the applicants. Now, in our current book of business, that would not have a huge impact on us, because now, do we have some people that are lower than that? Yes, but usually not both. Someone's usually higher than 680. I mean, if I was to take a stab at it, I bet you our average credit score is 720, somewhere in there. So I don't think that was going to actually have a massive impact, just a smaller one. The last rule change that CMHC is making is that you can no longer borrow your down payment. Now, it's really important when you think of the term borrow that is specifically that, borrowing. So when you buy a place and your parents give you some money, that's a gift. It's non-repayable and you don't have to pay that back. So that's not what they're talking about. What we're talking about is lines of credit specifically, or things of that nature. When you borrow, you have to pay it back. That is no longer going to be acceptable at CMHC. Now, why I feel that that's not super important is because I can tell you that most lenders won't allow you to make up your whole down payment like that. Anyways, they've really taken that rule out. So I don't think that was going to have a huge impact either. The biggest thing that CMHC is doing is making that dollar of yours, that dollar of income of yours, a little less powerful. And that was the big one. So again, great news is that the other insurers are not following suit. So come July 1st, probably just be business as usual. But I think what's really important here, and it's a good opportunity to discuss, really, where is the impact of mortgage insurance and what's the impact when they play with these rules? Because I don't think people understand how far-reaching it actually can be. So in Canada, most everyone knows that when you put less than 20% down, your mortgage has to be insured. That goes for what we have here is both two types of lenders. We have banks and credit unions. We call them institutional lenders. And then the other kind of grouping is what we call monolines. And those are typically online only lenders. They're called monolines because they only deal on one product, just mortgages. But you often see very discounted rates, awesome web portals because they're online only, and they originate all of their business strictly from mortgage brokers. So there's a lot of symbionts, a lot of connection with mortgage brokers and monolines. So those are the two basic lenders we deal with. And in both types of lenders, if you put down less than 20%, you will pay insurance and it just gets added to the mortgage, client paid. So that's not news to a lot of people, but this next piece really is. What people don't realize is what happens when you put 20% down or more. And this is a real big thing. So what happens is when you put down 20% or more and you're using a monoline, they actually insure all of their mortgages. The difference is they pay for the insurance. They're actually required in a lot of cases to get that insurance. Their investors require it. So, and then with banks and credit unions, they don't have to insure stuff that has 20% down or more, but they do insure some of it. So what people don't realize that when you put less than 20% down, more than 20% down, your mortgage very likely actually still could be insured. Now, most of the time, that has no bearing on your decision and what you care about. But what's really important is that because behind the scenes, these mortgages have to be insured, that when they change mortgage rules, or specifically mortgage insurance rules, it could actually affect these 20% down or more mortgages. And that's why these rules that CMHC rolled out, if they were to go across the board, could have had a massive impact. So I think it's really important to people to know that kind of inner workings, that behind the scenes, that just because you put 20% down doesn't mean your mortgage is not insured. And it also doesn't mean that you're not susceptible to mortgage insurance rules, even though you're not paying for it. So if you guys have any questions about mortgage insurance, it's a bit of a complicated topic, but an important one. This isn't the first time we've seen mortgage insurance rules change, and I promise you it won't be the last. We'll see much more of these. We always do. Please reach out to us. We always have an explanation for you. Any mortgage questions, we're here for you. It's Jason Suttie with Suttie Mortgage. Your story starts here.